Well, hello and welcome to a brand new episode of ET Smart Investor, where we discuss all about your investments, new strategies, and much more. I'm Neha Vashisht Mahajan, and today I'm here with Mr. Feroz Aziz, Deputy CEO at Anand Rathi Wealth Limited. Thank you so much, Feroz, for taking out time and joining us today on ET Markets Livestream.
Yeah, good evening. Glad to be on your show. Yeah.
Good evening. So, for the people joining us today, in today's episode, we are going to dive deeper into low volatility index and momentum index funds. And should you pick one of these funds at the current juncture or not? So, let's quickly start our session for today and let's understand what exactly are low volatility and momentum index funds and how are they different from normal index funds.
Yes. So let me describe to the viewers what the difference is. See, basically, an index fund which is created on the basis of the market capitalization by the exchange, like NSE
Hmm.
500. NSE 500 has six rules on the basis of which those 500 companies are chosen from a set of 2,300 which are listed on NSE. Those rules
Right.
are not formulated to create a basket of homogeneous stocks, but they are tried to be arranged in the chronological order of size with some conditionalities. That's an index like Sensex, Nifty, NSE 500, Mid Cap 150, Small Cap 250. All these are indices formed on the basis of the size of the companies. And generally,
Hmm.
these are made by the exchanges. Now, there are other indices which NSE creates to help asset management companies launch index funds on customized indices. Those customized indices can be whatever under the sun. So, if you want to create an index which is customized to Nifty, you can create an index which is customized to Nifty. So,
Yeah, I think we
short
got
segment.
cut in the middle. Yeah.
Yeah, sure. Let me go again. So there are these volatility index and momentum index are customized indices created, right? There are
Hmm.
several customized indices which can be created. Now, if I want to create an index which has only MNC companies, a service provider like NSC can create that customized index. So these are customized indices. Now let's go to the specific question of low volatility. As the name
Okay.
suggests, out of a large universe, if the index chooses those stocks which are not moving too much, that's called a low volatility index. And
Hmm.
if the index is created choosing stocks which are growing very fast, currently in the recent past, that's a momentum index, as the name suggests. Low
Hmm.
volatility index will take only those stocks which are not moving too much. But
Yeah.
ironically, what happens is now, if you look at the last 3 months, the low volatility index has fallen 6.28%, whereas Nifty has
Hmm.
fallen 1.2%. So you may believe this is low volatility, but it fell
Yes.
5% more than Nifty, right? So any
Hmm.
retail investor who's buying these indices should not just go with the wrapper of their definition, because that factor has been chosen on the basis of past data, and time and again capital markets have shown past could be dramatically different and in some cases opposite to the future.
All right. So, as you mentioned about past performance, let's also take a little look at the history of these funds. Is there any substantial history behind these funds?
Yes, there is history. Now, there are two funds which of low volatility which were launched in 2020, which implies that they have almost finished 5 years of history. So on and so
Hmm.
forth. First it was two, then it became four, then it became 11, 12, and as we speak, there are 16 low volatility funds. And the
Hmm.
momentum side, the first one was launched in 2021. So the oldest one has 3, 4 year history. And now there are 24 such funds. So to answer your pointed question, there is history, but not adequate history of larger number of funds because most of the funds have been launched in 23 and 22.
Right. So let's also quickly talk about factor-based investing and what are your thoughts on factor-based investing? Is it great or not, and what are the uh, drawbacks?
See, I personally think it's very important to take 30, 40 seconds to define what is factor investing. An investing strategy which depends on a certain factor. Okay, that's why it's called factor investing. Low volatility is a factor, momentum is a factor. Okay, high dividends could be a factor. Anything which makes a group of stocks homogeneous could be a factor. There could be single factor models or there could be multi factor models. If I want to choose those stocks which are in manufacturing, with
Hmm.
low volatility and high dividend. Now you're looking at three factors put into one. That's called multi-factor, right? So there's
Okay.
factor, multi-factor, anything which can be mathematically derived with lesser human intervention and depends on a
Hmm.
factor is called a factor investing.
All right. So now let's move to the performance part of these funds. If we talk about the performance of low volatility and momentum index funds, what is the performance saying if we compare it to the other funds, and what are the numbers say?
I personally think these have disappointed, extremely disappointing, not because only of performance. See, the promise the low volatility fund throw up for the client is not performance; it is lower
Hmm.
risk. But if performance is also lower and the volatility also has been higher, then as a group of
Hmm.
funds, I'm not saying there are no exceptions. There could be very good ones, there could be very bad ones. If I have to evaluate the entire group of 16, they've disappointed because their risks have been greater. Their volatility has been greater on a 3 month rolling basis. So, minus 6% is the performance of the group, low volatility, for the last 3 months. 24% positive is the performance for the last 1 year, and 16% for 3 years. Now, seeing this in isolation may not make sense, so I'll have to read out the corresponding Nifty numbers to put a context to
Sure.
the numbers which I just read out. 3 months, 1.2% negative is what Nifty has delivered, 17% positive is what it has delivered in a year, and on a 3 year basis, it has delivered 12.3% Nifty. And when you look at other fund categories like FlexiCap, it has been 2, 29, and 17. So FlexiCap has beaten on all time frames a low volatility fund group, is what I would like to say. Multicap has also beaten them on all three places, and large cap has also beaten them in two cases out of the 3 year periods.
All right. So before we move to the last leg of our session, I want to talk about one more thing is that's about underperforming stocks. So both these indices might have some underperforming stocks as well. So what happens when these indices have underperforming stocks within?
Right. So if these indices have an underperforming stock, see, every index created on a certain factor has some rules laid out so that
Hmm.
there is no human judgment. That's a good part, and sometimes it's a bad part. If I love a fund manager, I would rather have him manage it than a computer manage it. Now that you've
Hmm.
gone to manage by a computer, there are some rules laid out. So if there is underperforming stocks, if it is underperforming for longer periods of time, is when the rule will throw these stocks out of the index. For example,
Hmm.
now if you look at in the momentum index, Nifty 200 momentum 30, there are 30 stocks which are supposed to be there out of a 200, which are chosen on the basis of momentum. But stocks are stocks. They may show
Hmm.
momentum. The day you buy it, they will become the laggards. Also
Yeah.
happens in life, right? So, like Tata Motors is a part of that index with 4% weight, has delivered almost about minus 20% return in the
Hmm.
period from July till now. So on and so forth. There will be underperforming stocks, but if they adequately underperform for longer periods of time, they'll be thrown out from a momentum index for sure.
All right. So before we move to the questionnaire from the audience, one last thing I would like to discuss with you is about the ideal way to invest if one is not going for these kind of funds. How can an investor prepare a portfolio? Because as we discussed, there are other funds in the market right now which seem to be better than these two. So what is your take on this?
See, my take on this is very clear. You have to first in the world of investing, you decide what you don't have to do. You can live
Hmm.
without. It is not worth the complexity. I have a client who has 2,000 crores in equity mutual fund. He does not have one fund, which is a factor investing. राइट टू
Hmm.
थाउजेंड करोड़ के क्लाइंट को जरूरत नहीं पड़ी है एंड पोर्टफोलियो परफॉर्मेंस इज स्टूपेंडस टू से द लीस्ट. So why does
Hmm.
a client or an investor with 8 lakh rupees needs to go straight to do PhD? He needs to finish his fifth standard, sixth standard, seventh standard, and not go to something as complex as factor investing when he has so many plethora of options available. That's point one. And I can assure you,
Hmm.
in my portfolio, I don't have factor investing funds, and I still my portfolio on a risk-adjusted return basis, measured in Jensen's alpha, will be good if I have to put it
Hmm.
modestly. So don't buy these. Is my strong suggestion. Make your life simple. And what should you buy? You buy the conventional categories: flexi cap,
Hmm.
mid cap, large and mid cap, small cap, contra, and focused. Contra and focused can
Right.
give you that little tadka of excitement if
Hmm.
you're really looking at that direction. But don't
Hmm.
go whole hog just to go sit in a roller coaster, which sounds more complex than delivers value. So these are the five categories I would stick to, and that's what I've stuck to for my monies personally. So I'll read out some funds if you so chose to have them for your viewers:
Sure.
HDFC FlexiCap, DSP Equity Opportunities, Kotak Emerging, Invesco India Small Cap, SBI Contra, and ICICI Focused Equity. These are the funds which are six different categories from six different fund houses, so that you get a diversification which is meaningful on category level
Hmm.
and AMC level.
All right. So before we close, we have a handful of queries, but we don't have a lot of time. So I'm only going to pick one query for you today, which I think is a good question. It's by Anil. He's asking what to do if I've already invested in momentum funds and the fund is also doing good.
Wonderful. So, Anil, if you've already invested in a momentum fund, if it's doing very well, I personally think if that is your only fund, then you have to
Hmm.
make a change. If it is one out of your five funds, don't worry. See, if the rules of the game are foundational rules. There's nothing so scientific about what I'm saying. So
Hmm.
the point I'm trying to make is, if it's one out of your four funds, continue to hold it. When it's time to redeem, I think you'll have to get into specific of which fund are you speaking about, because there are almost 29 momentum funds. So write back to us with a specific scheme, then it'll be right for me to give you any piece of advice. Otherwise, it'll be wrong. If it is only fund, then move out of that
Hmm.
fund and get into a multi-cap or a flexi-cap category.
All right. So this marks the end of our segment today. Thank you so much, Feroz, for taking out time and joining us today on ET Markets live stream for ET Smart Investor.